Hello guys, welcome back to another Lumley trading video. In this one we are going to be doing some in-depth stock analysis over on AMC. So to get straight into it, what are key levels I'm paying attention to going forward? So we did analysis on this video when it's done the pumps before. We always knew it was really just going to come back down, and that's why we traded it playing credit and debit spreads, because we can catch the tops and we don't have to be too accurate on the price reversal. So again, the problem with this is it's not something I'd be buying at the lows. Again, that's just from how I trade. I think more likely than not, unless you kind of have some sort of a tight stop, which if most people are buying these lows, you probably don't. You're most likely just going to get left bag holding. That's why I really don't trade these stocks at the downside, or because I just think, again, there's a lot more risk. The risk to reward's not really there. They're a lot easier to trade from how I personally trade when they start to rip. So yeah, between the ranges of 350 and 315, these are going to be targets. So if I'm holding the stock short now, this is really my overall bottom target. I wouldn't look to hold short past here, because this is what is considered fair value. And obviously, yeah, taking through fair value is just basically a 50-50 gamble on where you're really going to go from there. So not something I look to trade through there. If we break through here, again, we got no deviations, and the reason for that is it's been such a strong selling off stock. So we don't actually have any support from a deviation perspective, so it will just be those key psychological levels if you're looking for support, so $3, $2.50, $2, and so on. But really where the main plays come, at least from how I trade, are going to be if it can pump up to these high levels, $8. 9.35, these are our first deviation over on the 6 month. Now if we hit into these levels, again, I'm probably looking to play the credit or debit spreads, but considering it's not extremely overbought at those kind of levels, it'll be reduced size. Again, you're always getting a one-to-one risk to reward, so I'll just be reducing size on this kind of trade. And then if we can start breaking it up to the $13 and $15 levels, this is where I'll probably start going in with a bit more normal size. Again, the first time we hit these levels, at a minimum, I expect a pullback, if not a overall reversal. And that's why I said I play them through the credit or debit spreads. What I can do, if say I open up 10 contracts of it, we start to pull back, they're up maybe 20-30%. Cool, I'll lock in that profit on maybe half of the contracts and let the rest run. Because then at least if it comes a loser, which I would be very surprised on these kind of stocks if they're already overbought, that they expire overbought. But if they do, okay, cool, we're taking a small loss, not the end of the world. But if they finish in the money, then again, we've made quite a good, profitable trade. So again, $13 will be the first level I'm looking at, $15, and then if we break that, $18. And again, really the way I trade this is, I'll tend to open them nearer to the end of the day. And the reason for that is, when these stocks tend to rip, they tend to do it, the majority in one day. If you go here, daily chart, big move on the first one. Okay, cool. We would have got one trade here if there was a level there at the time. No level hit, no level hit. And then this is kind of the extreme reason why I kind of wait nearer to the end of the day, because we went through, again, levels probably have changed since when we were here, but potentially we went through 2 levels here. So really, we don't want to be adding in 2 sizes, even though they'll probably both expire in the money. It's just always about risk to reward. Can we, wait maybe 2 hours and get a much better chance of success? And, a lot of the times you can. So that's just one of the things I wanted to note out. If you're curious into when I kind of enter these spreads, if we do pump. Just going on to those final resistances, and we got $21, $23, and $26.50 as final resistances. Again, these high levels, probably not all that likely to happen. Yes, this stock will get the occasional pump, but that would be quite an extreme one. Again, probably require some sort of a short squeeze to get to those kind of levels. So really my main focus will be between the $8 and the $15. I think these are a lot more reasonable, and definitely ones I'll be looking to trade. Again, the 8 to the 9.30, if we hit them, smaller size, 13 to 50 will be much bigger size. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out this analysis video.